All right, in summary, we did a little session here. You'll notice if you look at the video clips, there's probably 3 or 4 that were interrupted. And I just want to go through the concept of what we did with the euro. It was to build a system, a strategy during a select period of normalized ATR, average true range. So what we did is we took a slice of time in the marketplace, and a slice of time, if I may be so bold, without interrupting other trades that are going on. So I want to make sure that I don't cover up your at least your trade board here. If I share with you part of the subject of the secret of the success of getting more out of a trading program is that we want to look at what the condition of the market is. After all, if we go through a heightened period of volatility and you start to build a trading model on increased volatility, and volatility, in my mind, is being defined by average true range. Current market environment of the euro currency is at a 18 or a historic low. We're at 38, 10-day ATR is 38 points. We took a slice of time here, and if you notice, the data is missing from, we probably could go back, but what we did is we took a slice of time, and you can see here the ATR is around, if I'm not mistaken, take a look at the average of the ATR here. Boom. So that's the low, that's the high. What's the average? Right down the middle, it's around 70. I mean, just by eyeing this is 72. One of our trade members actually did an Excel spreadsheet, and this goes back to the average true range of the euro currency in that period where we saw an increase into the 70s through this period of time. One of our members came up and said, oh, and by the way, John, the ATR in that price range was, I believe he posted 76 cents. That, let me double check and scroll back. From July of 2016 to November 2016, the euro medium of the average true range was 76 cents with a standard deviation of 0.0021. So we just looked at the average true range and just eyeballed it and said, gee, if that's the high and that's the low, what's the ATR, the average of the ATR? And I got there, I don't know, draw it down a line, 75 cents more or less. I mean, there it is. There's your average. It had a low of 60 and a high of looks like 80. So, I mean, regardless, what I'm trying to do is develop a strategy in the euro currency. And then what I wanted to do was, okay, we had a period of heightened ATR, heightened daily ranges. We had in that period a market trend that went up, a trend that went down, a market went up, the market went down, the market went up, it went sideways, it went down, and then the market went up. So in this slice of time, we're just trying to build what type of combinations of ALGO criteria would work in a heightened period of average true range, not exorbitant, but normalized average true range around 70, 80 points, okay? A. B, in a market condition that was neither up, down, or sideways, but had a good representation of all the above market conditions. And I think in this period, you could see that we did have a period of up, sideways, down, up, and there was something there for everyone on both sides of the market. And I think you should be able to agree with that concept that, yes, while possibly that uptrend was a lot less than this downtrend in time, the magnitude of the price move, whether it was up or down, did not change the scope of the ATR. I mean, the market ATR went up when the market went up. The ATR went up when the market went down. So ATR was not a function of trend in the market. ATR was a function of anticipation or market participation of traders in the market. And so if we're building a strategy, should we be building long or short only? And that's the other question. In a seasonally strong period of time, maybe long only. In a heightened period, if we get into a period of higher ATR, I want a robust strategy that does both. That was the logic behind what we did. And what we then built upon that was a strategy that went and took the time of that slice of time on our trade. So we took our model, we took a chart on the euro currency, we inserted our version 17, Algo System 17 Extreme V2, but lucky number 18 release. Okay? That's what we did. And what we came up with in this period of time was we're still trading in Central Time from 7 a.m. minus add 15. So that's 8:15 to 2:35 or 3:35 in the afternoon. We exit at the end of day. Position size is 2 contracts. The max trade loss on this was calculated at 375 with a max trade profit of 250. It trailed the stop at 50% with a trail locked in at 34, meaning once the market got halfway to profit, it jammed a stop at BE or just slightly above 34% of the profit. It scales out. It doesn't scale out. It won't get out at the profit, but it'll max out. If things don't happen over time, then it will get out at that profit, and it just trails the stop. So if you get functional days where the market gives a trend, then you're going to make money. Now, what about a stop? What stops did we use? Once again, for last conditional change, while it works dynamically on higher time frames, for day trading, we find that it's less effective. A better combination is the dynamic exit, which is a combination of LCC with ATR and compression exit. And we optimize that compression exit is true. It works. And you can see on this example on the trade, you got the gray, you got your yellow, and that is your yellow is your compression. Compression exit didn't start immediately. It starts after the trade is initiated. Once we get beyond 1.75 of the ATR. In other words, once we go through, if an ATR is 10 cents, once you go through 17 cents, then the compression exit is activated. It won't activate until a threshold is hit, and the threshold is 1.75. Your dynamic exit works, and your trailing stop function is in. If, by chance, the stops are too far back, the compression exit kicks in, and it will override everything. Long live the compression exit function. Next, we note that the best way of trading this, we optimized, is not to reverse the signals, meaning if you're in an active short and you get a little buy signal, do not get out of your trade. Wait for the trade to expire and get stopped out on its own is what it optimized out. We are taking PPS with a 3-to-1 risk-reward ratio with a combination of a 14-period MA based on the high. So buy signals will not even be initiated unless we get above a 14-period moving average of the high, which is a moving average channel system for the euro currency, which is really dynamic information. Next, we came down and said, should we be taking sell signals? And it said yes, but take a period of a moving average of the lows, a 10 period. So wait a minute. That's ironic, but with this market, you see the reality is that tops take longer to form than bottoms. But since it's a euro versus the dollar, what's the top and what's the bottom? Is the dollar the bottom or is the euro the bottom? So think of the logic of what I just said. If the market's topping out, right, tops take longer, shouldn't the moving average of sell signals be higher, not lower? Interesting, right? So that's where the math came in and said, funny thing is, these are the settings that best filtered out your PPS buys and sells. It's nice to see that the algo works in the sense that it shows that we have a moving average of the high to break out for buys and a moving average of the low to break down to generate sells. We have a high closed doji, and we are using our momentum true. 8 periods, 5 is the moving average length. We can actually look at this and re-optimize high and low closed dojis and say, should I be using moving average or the back period of 3 up to 12 bars? Should I be using a moving average length? Is it, I don't know, if it's a high closed doji, it should generate signals before PPS, and that's the magic of this. So, but let's just see if we're using, and we should use a function of additional filter of high and low closed dojis using moving average. And I can then optimize on that, and we did, and then we hit OK, and then we hit OK, and hopefully I didn't ask for too much data, and we'll find out I'm only asking for 240 tests, which won't take that much time whatsoever. Again, the whole practical purpose of doing this Euro currency breakdown is we are anticipating, because of seasonalities and because of the historic low ATR and the length of time it's been at a low ATR, we're expecting a change to occur. So rather than wait for the change and figure it out later, we are anticipating, we're building, and we're building strategies in the assumption that if we do get back to normalized ATRs of 70, 80 points, then this is the kind of model we want to start to activate as we see an expansion in ATR in the coming weeks. So there's where we got the whole process of how to build a strategy in this with this. So if the ATR model right now, or the ATR environment is sub 40 as it is, the 10-day ATR sub 40, do we apply this strategy right now? No, we can't apply this strategy. And then you would see, and at least you've got it on your shelf. You've built it for the different condition of the ATR. That's the key. All right. We are also coming up to a rollover session. If you notice, I'm using the backtest model of the @ sign, which is a continuation contract. As of the time of this recording, you guys know it's 2 o'clock in the afternoon, and it is, again, November 18th, a Monday. We are coming close to the end of November, if you think about it. And then what does that mean? A December futures contract is not going to be the futures anymore. When you're in December, a December contract is a cash market. We're going to have to roll out into what? The March contract. And that's where a lot of system traders really get screwed up, because there is a difference in that rollover period between the contango. The price difference can vary between the front month cash futures market, December, and the forward March contract. And so those variable price differences can also skew things. And that's why I'm using the continuation contract and building a strategy that's not applicable right now, but was applicable in a market environment that was set at around a 70 ATR. My anticipation is I can't foretell where the market will be in 30 days. I can't prognosticate where the market's going to be in 90 days. But I can anticipate, if we've gone through an extreme period of low ATR, maybe we're going to expand and bounce back up into a normalized ATR environment. And the fact that we have seasonalities dictating that we come through a seasonal change and we come through an end of year event, people may square up, repatriate money. Maybe euro money pours back into the euro. Maybe the European central bank stops quantitative easing. Maybe perhaps there's improved GDP performance coming out of the Eurozone. Maybe perhaps all of that would put back into account higher, not just euro currency value versus the dollar, but maybe increased interest in trading in the euro currency. And that's the difference. So the increase in activity in the euro is what we're after. And that's the model that we're using here, whether a market goes up, down, or sideways. And this is why we use that slice of time in the marketplace of what we did. It seemed to be a good average of ATR. And I wanted to say, let's take a sample of this data and apply it and see if we can build a strategy. Logically, I can't say this will work guaranteed, but logically I can say, if under those same similar conditions where the market expands and we go through up, down, sideways, choppy markets, then we have a model that we can insert and maybe use in that condition. And I hope that explains the logic process of why I'm doing this. We have an improved performance summary, our performance graph. Now that we've improved on our high close doji, we improved on our profit factor. We've got a couple more filtered trades that reduced our potential amount of trades to 100. We've improved our holy moly, gee golly willikers, our percent of winning profitability. and our profit factor is pretty still darn impressive at 2.96 for a 15-minute day trade model. In a time period where the market went actually down, so in this 4-month slice of time of an ATR environment, the euro currency actually lost 4%, 3.94. This model actually made money, and whether it's return on initial capital or whether it's the amount of return on account, which is what trade stations suggest you use, and I never suggest you use that. I'm suggesting everyone always use full margin when they use these algo strategies. Then that would be the main difference between your return on capital and, again, your return on account. So either way you look at it, another factor that I like to look at is what is my max trade drawdown? And that's something any individual trader can handle day trading in the market. And the last thing that I like to look at is, or another variable or input value that I like to look at is how many consecutive losing trades happen in this thing. On longs, 4 in a row. On shorts, 3. And winning trades is 7 and 8. So I know if I have like 4 losers in a row, I'm going to probably be paying attention to that 5th or 6th trade, at least in this environment. So, and then the opposite is true. After a series of strong runs, 7, 8, 9 trades in a row, I'm thinking, hey man, we've gone to the well one too many times, and that well may run dry. So the strategy performance summary, the performance summary on your strategy helps you also to know more about the market you're trading. So another essence that I like to look at is if I get a trade and I'm in that trade and I'm up $500-600, I'd say, well, the average winning trade is 343. Maybe I should take some proactive energy here and say, as long as I get out at something better than my average or near my average winning trade, then I'm within the scope of my strategy in the system, and I'm not going to fudge the results that much. It's when you're up $100 and you say, I can't stand it, I got to get out. Now you're not letting your system work so much. So that's just my 2 cents and observations in what I try to teach people how to build strategies. So the last thing that we would probably do one last time is say format strategy. The one thing we did not do, as I recall, in building a system was I didn't look at low close doji. So I don't know. I'm going to go with low close. I don't know 1.2 if that's the right model. So I'm going to go less than 1, a little bit of 3. This is the day trade system. The low close doji momentum. 1 means it's turned on. And what does momentum mean? Well, at the very least, the current bar needs to be higher than the bar 3 bars ago, maybe up to 12 bars ago. And that would define an uptrend. Because if I'm looking for a sell signal, I want a sell signal after the market went up, which was an action. And I'm looking for the reaction for the market to go down. That would give me a good definition of a reversal or a sell signal. So that's why we've got the momentum length there. All right. Next, moving average length. Optimize that. What do I want? If I use the moving average length, what should I be looking at? A moving average, at least 2 bars, right? And if markets go up and they stay up a lot longer than they go down, I don't know, maybe 20 period moving average based on what? A high, a moving average of the low, a moving average of the close. I don't know. Let's find out what the low close doji may need to get better filtered signals. And so we're going to hit OK. And now we're going to optimize it. And we'll find out. I'm asking for way too many tests, 6,270, because I asked for too many interactions between low close doji risk reward, momentum length, moving average, and high-low close. This strategy is going to take 6 minutes. And so since for purposes of speeding things up, let's abort this right now. Let's restore our original inputs, hit OK. Let's go back just to speed things up. And then let's just go to low close doji. And let's go risk reward real quick. What do we want to optimize? 1/2 to 3 to 1/4. Let's find out. We'll optimize that briefly. It's going to be Boom, 11 sample tests. It's going to tell you in a heartbeat. There it is. Next, format strategies. Let's go up here to format. Follow me if you're working with me together on this. Cool. The moving average length. Now let's optimize that function. The momentum length. Cancel. Excuse me. I hit the wrong line. The momentum length. What is the momentum length? I don't have an idea. It's at 3, 12, or 1. Let's find out. Okay. Should I use a moving average? I don't know. That's what I wanted to utilize. I got a lot to ask that. And then finally, optimize the moving average value, high, low, or close. And now let's see if I've reduced my, yeah, there it is, 570. This will take just a few seconds. It'll take about 20. As you can see, it's counting down. As this counts down, you can see your performance, the net profit. It's not really appreciating much. Momentum length, moving average length. It's telling me to use a moving average for so this is actually something that's not really efficient. A 2-period moving average is nothing that I would use. Just throwing that out there. So to me, it's like it's not adding any extra value of a moving average on shorts on low closed dojis. So now what we can do is I go over to my strategy performance optimization report and say, okay, I asked for a couple things. What I asked for was to look at the mechanism. 3, so that in case you forgot, what does 3 stand for? Close. High is 1, 2 is low, 3 is close. So my algo system says the best, at least in this particular market, it's suggested that we use a 9-period momentum length. In other words, if the market runs up, the current bar that generates a sell has to be higher than 9 bars ago's value. That would define an uptrend. Okay, I'm cool with that. And then it's telling me that it needs to close below the 20-period MA based on the close. All right, that's kind of cool. So I'm not sure I like it, but what is the highest? If you double click on the strategy, you'd go, what is the best profitability in this? 9,000 using a moving average of 3 versus 1, and at what expense? When I refer to what expense, I'm talking about my drawdown. At what is my expense? What heat? What about my average losing trade? You know, to build a good system, you got to understand what you're asking to lose to get money. What does it cost? If you're going to win the war, how many soldiers did you lose in the battle? Right? You may not want to lose that many soldiers or take that many hits before you get a big win. That's the kind of mentality that I'm using, right? So in this case, I would say, to be honest with you, whether it's 8,000, 9,000, 9,200, my best guess is that I don't really see any value in adding a moving average function. It didn't add any value. It didn't increase or decrease my my risk. And so for me, I've just uncovered the fact that, you know what? I don't like those new settings. I'm not going to use them because it doesn't add value to me. So with that stated, when I go over here, I go, okay, it optimized out at a low close doji using the momentum length 8 true, a 4-period moving average of the high. How does that possible? So I would turn that shit off right there. I would turn that off right there. It's not going to average out anything, add any value. You could re-optimize it if you want. You can add the last conditional change, which we didn't optimize. And if you do 0, 1, 1, meaning the market has to close below an LCC in order to generate a trade. Maybe that might add added value. So there we just ran that. And now we go up to our performance strategy and we look at our performance graph and we go, you know what? It didn't offset anything tremendously whatsoever. So maybe I could go back and look at the shorts in this time period and try to build on improving the shorts. We actually went from 107 trades to 112. That's number one. Our performance is about right at the same level. I mean, my initial return on capital was 8. Now it's 9%. So I got a little bit better. And what about my risk? It didn't change. And that, my friends, is a good way of understanding a model that you could use in a heightened period of ATRs and turn that sucker on. So until that happens, go back up here and go to Format Symbol. And then if you notice, we have last date. If you just go up here to 10 days back, last date, you've got to change your last date and get it to today. So go today. So you want to go 10 days back, and then you can test this particular model in the current environment. And if you do that, you may find, and I'm going to bet, let's double check. Let's go 10 days. That's 15 minutes. That's just a small sample. I mean, what's the euro currency done in the last 10 days? Probably not a lot, right? It really hasn't done a lot, nor has the trade strategy. So, I mean, it's not really giving you, here's what the market's done in the last buy and hold. The euro currency's up, it's unchanged. So your system's kind of unchanged. The market's unchanged. And during that time frame, it's done nothing. You've generated 9 trades for nothing. So this is not the type of settings, just to prove a point, that works well in a market environment that doesn't move. So let's take a look at some of the signals that it's generated and look at the results. Okay, it got a buy, it got out, it got another buy, it got a buy, it got out. It's not trading at 4 in the morning when the big trends happen. It took a buy, it made a little bit of money. It's not, it's getting out. It went short in the low. I mean, it's not really doing much, and the market didn't do much. So if you're in a low ATR, you need something that has lower profitability, apparently. And if the markets start to expand in a higher ATR, this is a good model for us. So that concludes today's lesson on what to build for a euro currency and anticipation of when we see an upside move, if we get the upside move. As it is right now, this particular strategy here that's currently working is for a lower ATR model environment. It's got, if you look back from 9.8, it's not built for anything other than taking quick little profits. I didn't build this thing up with you guys whatsoever. I just added it today. And so therefore, this is a market that we would need to work on together. And I wanted to work on not just what we're trading going forward, but also build something that we can use if we do get this seasonal upside. But that concludes our time for today. I hope that helped, and I will see you guys tomorrow morning. Unless anything else happens dynamic, have a great trading day. I have to conclude this session. Thank you.